Hello. In this lecture video, I'll be going over this problem again in a little bit more detail, and then talking about this journal entry, and then also doing some additional problems on cost of goods manufactured, cost of goods sold. So as we looked at over here, I just want to comment on a few things that, remember, the cost flows go from raw materials to work in process to finished goods, and then eventually down to cost of goods sold. Also, look at what number from raw materials shows up in work in process. It's not the raw materials that were purchased, which was 13,000. It's the amount of materials used. So the way we calculated that is we said we had our beginning plus our purchase minus our ending gives us the amount of materials used. And that's the number that shows up in work in process. And then we went through and we used these numbers in our T accounts to calculate cost of goods manufactured. Beginning WIP plus additional current manufactured costs minus ending WIP gives us our cost of goods manufactured. And then we used that number to calculate our cost of goods sold. We had our beginning finished goods plus our cost of goods manufactured minus our ending finished goods gives us our cost of goods sold. Now, if we assume the company sold goods to a customer for $48,000 cash, what is the journal entry? Whenever we have a sale, like we have two journal entries, one to record the sale, one to record the cost of goods sold. Because this is for cash and not on account, we debit cash for $48,000 and then we credit sales for $48,000. If this had said for $48,000 rather than cash, but it said $48,000 on account, we would debit accounts receivable and then credit sales. The second journal entry to record our cost of goods sold is we debit cost of goods sold. Why do we debit cost of goods sold? It's because cost of goods sold is an expense. It's an expense on the income statement. So the way to recognize that an expense is going up is to debit the expense. So we debit cost of goods sold. We no longer have the finished goods because we sold them to our customer. So the amount of our finished goods right over here, this is for our $33,750. We sold it for $48,000. The difference is the profit. Okay. Here's our cost of goods sold. And we credit finished goods because we no longer have it. So finished goods is an asset account. So the way to recognize that an asset is decreasing is with a credit. So that's why we credit finished goods from $33,750. This journal entry moves the cost of those goods that we sold from finished goods to cost of goods sold. And by doing so, it moves it from the balance sheet, that's where finished goods is, to the income statement, that's where cost of goods sold is. Okay? So what I want you to do now is to pause the lecture video, and I want you to do these additional problems on calculating cost of goods manufactured and cost of goods sold. And it's this one keeps on going. You have quite a bit of practice over here, all the way through this last problem on cost of goods manufactured, and then it ends there, okay? So go ahead and do those problems, pause the lecture video, do those problems, and then restart the lecture video, and then we'll review it. I did want to say one other thing here about whenever you have to calculate cost of goods manufactured. You have two types of overhead. One is actual and one is applied. As we'll talk more about in our job order costing lecture videos in the next chapter, what you want to use to calculate cost of goods manufactured is the overhead applied, not the actual. It's the overhead applied. Okay? So I'm going to go ahead and pause the lecture video. Go ahead and pause it, pause yours, and then when we restart it, we'll be going over these problems. Okay? Thanks. Hello and welcome back. So let's check your work. So we have this company, Bricks, and you can see that's that same setup with the same cost is used in a couple of these problems right over here. And they make custom brick, and then they use job order costing. This is something we'll talk more about in the next chapter. But for now, we can still go ahead, even though we haven't covered job order costing yet, we can still use what we know from this chapter to calculate the cost of our direct materials and the cost of goods manufactured and cost of goods sold. Okay, so to calculate the cost of our direct materials, that's what this is asking for. Remember, we did that in that prior T account for the prior problem for our Henderson company, where we took our beginning raw materials plus our purchases minus our ending, and then that gives us the cost of the materials that we used. And this is just a fancy way of asking that same thing. What is the cost of the materials used? It's equal to your beginning plus your purchased minus what you didn't use. These two together is the total cost of the materials that you could use. This is the cost of the materials that you didn't use. Therefore, if we take the total cost of the materials that we have on hand that we could use minus what we didn't use, we get the cost of the materials that we did use. C is the right answer. Okay? So now let's take a look at this next problem, which is to calculate our cost of goods manufactured. So remember, that's equal to the cost of our beginning WIP, which is given to us, plus our direct materials cost, and you can see how we got that up here. So that's equal to, remember, it's the cost of the materials used. It's not the cost of the materials purchased. So that's how we got that 209,500, plus our direct labor, which is given to us, plus our manufacturing overhead applied, and I mentioned right before we paused the lecture video that you want to use the manufacturing overhead applied to calculate cost of goods manufactured, minus the cost of our ending work in process. So beginning WIP plus additional current manufactured costs minus the cost of our ending WIP gives us our cost of goods manufactured, 338,200 right there. That's the cost of our goods manufactured, okay? So let's look at our next problem, which is calculating cost of goods sold. Okay, what is our cost of goods sold? So we take the cost of our beginning finished goods, which is given to us, plus our cost of goods manufactured, which we figured out on the prior page, 338,200, remember in that problem, plus our cost of goods manufactured, minus the cost of our ending finished goods, gives us our cost of goods sold of 339,900. A is the correct answer. Let's look at the next problem. And next problem is kind of tricky because it's asking you to back in to figure out cost of goods manufactured. That's what this problem is asking for. It's saying, what's the cost of the units transferred out of work in process as completed goods? That's simply just another way of asking, what is cost of goods manufactured? Well, to get cost of goods manufactured, we could use our formula to calculate cost of goods manufactured, and then back to calculate, cost of goods sold, and then back in to figuring out our cost of goods manufactured. So we have our beginning finished goods, and then we have our ending finished goods, and then we have our cost of goods sold. And what we want to know is our cost of goods manufactured. So I can set up an algebra formula here to calculate out my cost of goods manufactured. I can say my beginning finished goods plus my unknown minus my ending finished goods equals cost of goods sold. Remember, the formula for calculating cost of goods sold is beginning finished goods plus cost of goods manufactured minus ending finished goods gives cost of goods sold. So I can then put in my unknown, my COGM. You can label it X if you want to. Solve for X. It's 252,000. That is the correct answer right there. On our next problem, we're again asked to calculate cost of goods manufactured. So we have our beginning work in process right over here, our beginning work in process, which is given to us, plus our direct materials used in production, and that's told to us right there, plus our direct labor of 42,300, which is given to us, plus our manufacturing overhead applied, remember I always said to use applied, 45,300, minus our ending work in process of 28,700, gives us our cost of goods manufactured of 380,700 right there. Okay, so now let's look through at the next problem. We have our company makes solar heaters, and we use job order costing, and we have our beginning raw materials, we have our beginning work in process, ending work in process, and we're saying, what is the current amount of manufactured cost? So this is kind of similar to that problem that we just talked about, where we need to be kind of clever and set up an algebra equation to help us solve the problem. And what we can do is use our knowledge of how to calculate cost of goods manufactured to help us set up the algebra equation to solve this problem, okay? So we know the way that we calculate cost of goods manufactured is by taking the cost of our beginning WIP plus our current manufactured cost, which is our unknown, minus our ending WIP, gives us our cost of goods manufactured. So then I can say 6,700 plus X, which is my manufactured cost, minus my ending WIP gives me 331, which is my cost of goods manufactured. Solve for X, it equals 332, which is our cost of our current manufactured costs. Okay? We look at the next one. Which of the following is not part of manufacturing overhead? Look at the key words: factory, factory, production. These all relate to the factory. That means they are all product costs. Salaries of supervisors, that's indirect labor, so that is overhead. This is classified as manufacturing overhead. It falls into that other category for manufacturing overhead. Same thing here, the other category for manufacturing overhead. The key word is sales staff. That's telling you it is a period cost. Okay. We look at the last few problems right over here. Which of the following are period costs? Which of the following accounts do not appear on the balance sheet? And then cost of goods manufactured. Which of the following is a period cost? Look, again, factory, production, indirect labor. We know that this is going to be manufacturing overhead, and manufacturing overhead. Look at the keyword corporate. This is administrative cost, so this is a period cost. Which of the following accounts does not appear on the balance sheet? Well, all these are inventory accounts and they do appear on the balance sheet. They are current assets on the balance sheet. Cost of goods manufactured does not appear on the balance sheet. And then cost of goods manufactured is equal to A. It is the amount transferred from work in process to finished goods inventory during the accounting period. Okay, so this concludes this lecture video. Thank you so much.